Well, this is a very large contract, $10 billion, one of the largest, I think, ever given out, as President Trump kind of mentioned. And Amazon seems to be the front runner there. They are clearly the dominant pure cloud provider, and this is a cloud contract. And everyone else is trying to compete with Amazon is upset because they want a piece of that contract.
And what is their beef with Amazon here? That they're too big, that they can't do it? What?
Supposedly Amazon had some contacts that they should not have contacts with people that are going to be issuing the contract, so they feel like they had an unfair advantage.
Aha! So that's the origin of the issue here. Let's turn to the earnings that will come out later today. What are you looking for, and where are the big growth drivers in Microsoft's numbers?
Well, it's the cloud.
It's the cloud, right? Azure, right?
Azure, 60% growth. But Microsoft is becoming a hybrid cloud company. And the interesting thing about Microsoft is they are moving all of their hardware into the cloud and all their customers' hardware into the cloud, but it has not cannibalized their existing core customer base, and actually that's growing pretty healthily this quarter in particular. So we're looking for that to continue. The cloud continues to grow, but their legacy business is healthy. And right now, over the next year, the legacy business has seen some one-time upgrades because of end of support for a couple of their key products, Windows 7 being one of them. So you're seeing a pretty quick migration out of Windows 10 and more hardware and PC sales as a result of that. And we're also seeing end of some of the server products that they have, and people are upgrading those server products also. So we're looking for a very good quarter with Microsoft.
And Japan is going to raise its sales tax in the fall, and that's actually going to have an impact? It's going to pull forward?
It's only 4 or 5% of their sales, but apparently it matters. I think they're going to a 10% tax instead of 8%, so that'll help.
So when you look at Microsoft a year from now, 2 years from now, 3 years from now, what sort of growth do you see? I mean, given if we're assuming that cloud is going to grow and it's going to be a bigger part of their business, what kind of growth overall in revenues are you projecting, and what kind of margins will we then be seeing? I mean, what should investors prepare for since cloud is a lower margin business?
So cloud has been historically a lower margin business, but for every incremental dollar, the margins go up quite a bit. So they're growing revenues now $15 billion a year incrementally. They cannot hire the people to keep up with that revenue growth. So their incremental margins, I would argue, and it's been our thesis for 4 years, is very, very high.
There's a lot of leverage.
A lot of leverage. Incremental revenue, not a lot of incremental operating expenses. So we think they can expand. We look at EBITDA margins mostly about 100 basis points a year. But we think the revenue growth can stay in the 10% range, for a couple of years. The base is getting so large, it probably will go down to the high single digits in a few years from now, particularly as some of their legacy businesses do start to decline.
What's the one number you'll be looking at and our viewers should look at this afternoon that you'll have pay the most attention to?
Well, we always care the most about revenue.
Yeah.
And we're hoping they've been beating on the revenue guidance by about 200 basis points per quarter. They've been beating on the operating income by about 600 basis points year over year for the last 3-4 years. So we want to get those trends.
Where does the stock go from here?
Well, that is the one concern on the stock. It's gone up a lot, and it's getting close to 30 times earnings. We do think it can get to this 30 times earnings number, but then I wouldn't be surprised if we had a little pause.
Historically, what is that multiple like? Because I was looking at the price of sales on a 5-year basis. 8.9 is the high in the past 5 years, and we're at 8.6 right now. So we're butting up against, the high end of where they should be.
Oh, totally. And the PE historically was more like 20 times. Now we're getting to 30 times.
Wow.
But they didn't have really much growth for 10 years up till about 3 years ago, and the growth has massively accelerated because of the cloud.